Hi everybody, Russell here from VectorVest. All right, so this week we've spoken about Domino's Pizza in our essay, and this is the video that follows this. Let's drill in a bit further. All right, so I'm going to click on graphs, and I'm going to type in DOM, just the first couple letters there for the name, Domino's Pizza. So VectorVest notes DMP is a ticker code. All right, so I select DMP, and on the graph layouts here, I have selected VectorVest Simple. What I'm going to do here is I'm just going to turn off a few things. So let's turn off the stop and relative timing. I'm just going to keep the 12-month rolling forecast we've got on earnings on here. I'm going to pull it back 5 years, and I'm going to turn off a few of the other indicators here. Okay. Now, with that said, what I want to do here is I want to go back in time and have a look. You can see over here, during this time period here, notice how the share price was sliding. So let's do this. On the drop down here, if I select freehand line, okay, so freehand line, if I select this, let's draw it from there to there, let's right click, let's change the style, and let's make it stand out a bit more. Okay, so you can see, look at that. The price was falling, yet earnings on average were rising. Now, earnings were continuing to grow, and we can see that that took place during that time period, because if I bring over a couple of documents that I found here going back in time, so on abc.net.au back in August of 2018. If I scroll down a bit over here, it notes over here the fast food chain is the most shorted stock in the ASX. A lot of people were shorting the stock, but it noted that Domino's full year profit lifted 13% along with higher sales. So it was telling us that Domino's was really doing well. You know, a big uplift in its profits. So if you go back, the date here, 14th of August 2018. Then we go a little bit back further in time. So let's go a year prior to the 2018 year. So another article here, 15th of August 2017. Okay, Domino's Pizza share price taken a pounding despite fast food business delivering record full year profits. Domino's net profit was 103 million, up 25% on the previous year. So you're seeing the theme coming through here. Earnings are doing their job. Earnings are going up. So we see those earnings going up. Why then were investors not prepared to pay a good price for Domino's? Why then the slide in the share price? One of the key reasons there is that investors were not getting the earnings that they expected. But here's the thing. We know if you buy into companies that are continually growing their earnings, that share price will go up. It's just a fact. It happens time and time again. So if you go back over time, over the last 9 years, and I say to you, has the earnings profile been rising over the last 9 years and 26 days, for example? Absolutely, it's gone up, right? So over the last 9 years, where's the price? If I bring in my date line here, let's go back here, about $10 odd, and where's the price today? It's at $100. Has the earnings profile on average gone up during that time period? Absolutely. Okay, now, why then was there a setback over here when the earnings were rising? Okay, now to answer that question, let's zoom in and over here. I'm going to bring in another parameter here, earnings growth rate. So add parameter, capital appreciation, GRT. Okay, so what is GRT? VectorVest defines GRT as GRT reflects a company's 1 to 3 year forecasted earnings growth rate in percent per year. Okay, so let's put this in. GRT, let's put it on, right? So you can see the 1 to 3 year forecasted growth there on earnings. You can see it had been declining. So you can see it was around about 20% and it had fallen all the way down to 5. A 5% forecast there on earnings growth is still positive earnings, is it not, right? So you're seeing it here, it's still positive earnings, but the level of growth, at least represented here by a gradient, so to speak, in terms of that growth, will not be as strong as, say, as what it was back here. So let's go back over here in time. Let's see where the growth rate was really, really strong. So look at that. So you can see over here. Let's just do this. I'll take off this line for now, and let's have a look. So here is a very strong growth rate taking place, all right, for those earnings. So if I put on my mouse here about 20%, you can see, let's put a freehand line. Let's look at the gradient on average was doing about that, wasn't it? Okay, here where it's coming off, if I put on a line over here to look at the gradient, it's not as strong, right, in terms of the upward trend. So let's bring this across over here and we'll make it stand out. So here I'll right click, change the style, and let's make it jump out here. Okay, and over here, change the style. Let's make it jump out a bit more. Okay, there we go. So you can see, look, there's a gradient. It's not as impressive as a gradient here. Okay, so that's where that one there fitted in around about there, because the earnings growth rate wasn't quite as strong. Okay, so therein lies the lesson for today. I want to find companies with strong EPS, right? So strong 12-month leading forecast and earnings, because we've seen over the last 10 odd years, rising earnings, rising share price. But in the shorter term, if you want something that's very explosive in terms of its earnings, then make sure you pick on a company with a strong EPS. That's non-negotiable. Pick on good quality EPS, but then also make sure you've got a good GRT to back it up. Okay, so in recent times, let's just zoom this in over here. Look at this over here. Look at the GRT. It's starting to pick up again. This is exciting, right? So the forecast there, the forecast on earnings growth rate, starting to pick up, and we're also seeing it here in the EPS profile. All right, so the EPS profile here, it's set for another good upward move, and that's being reflected there in effectively the share price. Okay, so we've turned the corner on GRT, upward coming. Earnings are still growing. I'm going to throw in a few little extras here. Why are earnings continuing to grow? Why did earnings continue to grow despite GRT having a bit of a pullback over here? Well, let's turn it off for now and let's do this. Let's add parameter. Let's go into sales and market capitalization. Let's click on sales and let's click on the number of sales that took place. All right, so despite the fact that the 1 to 3 year forecast there on the growth rate was declining in the 2016 to 2019 period, sales were still growing. So that's very important. Companies need to continue to grow their sales. And the other thing too, let's add in under here VectorVest fields and then put in net profit margin. So what profit does that company make in dollars and cents for every $1 of sales that it makes? So for every $1 of sales at the moment, it's making about 8.65 cents in the dollar. But you can see during that time period here where things were softening a bit, although sales were growing, you can see that the net profit margin was starting to be eroded. Can you see that there? So your net profit margin of 12% down to 11. Okay, so you can see here, so 13 came down to about 12, around about, where was it here? 11 or 12. So you can see it was slowly coming off. It might not seem much of a drop, but when you've got sales, this is in millions, so 1,430 million, a 1% difference can really add up. Okay, so that gives you insight into the GRT that's taking place over here. Now, if I look at this currently at the moment, and I'll zoom it in just a tad over here, you can see that sales are picking up, continuing to fire up. But we can see that net profit margin is still under a fair bit of pressure, still around about that 8-9% mark. Okay, but sales are coming up. Sales are more than offsetting at the moment the drop in the net profit margin. It's just something to be aware of. Ideally, I would like net profit margin to be coming up. I'd like sales to be coming up. I'd like the GRT to be coming up along with those beautiful left to right rising earnings. Okay, so in terms of what I'm seeing with Domino's at the moment, great set of earnings. We know the earnings are going to continue to power on. Sales are excellent. We can see the sales have been really powering on over the years. Net profit margin, it's under pressure. It's not increasing its net profit margin. That's due to competitors and whatever have you entering the market, which some of those articles alerted you to. But despite some of that competitor pressure, earnings growth rate is to increase. So our 1 to 3 year forecast there is noting that earnings growth rate is going to pick up. That's due to the fact, from what I can see over here, that sales are more than making up for a slight loss there in net profit margin. Now, what I'm going to do is I'm going to throw in one last stock for Australia, OZL. That's the ticker code I want. Oz Minerals. Let's throw this one in here, and let's scroll this one down. This is quite a different story on the stock here, because not only have we got the great set of earnings that we want, right? So the one I say it's non-negotiable, you want a good set of earnings, but what you also want, let's turn this off for now, you want that growth rate to be nice and strong. If you're wanting to pick up a company that is exploding up in terms of earnings profile potential, look at that, the 1 to 3 year forecasted earnings growth rate there at 22%. You can see it's come off from 3 and it's exploded all the way up to 22. That's really firing up. Look at the gradient on earnings. So the gradient here was a bit flatter. Now it's really starting to explode up. Okay, and then you can drill in and have a look at the sales. You go, yep, sales are holding steady with a slight bias to the upside. And then you look at the net profit margin, you go, whoa, look at that. So sales are holding sort of steady, but look at the net profit margin. The net profit margin is really ramping up. It's come off from around about 17 all the way up to 27. Well, what does Oz Minerals do? Well, it's in gold and copper and the likes. What are the spot prices of those commodities done in recent times? Yep, you got it. They have shot up in price, and that's being reflected here in the earnings. It's been reflected here in the earnings growth rate. Okay, so run your stocks through VectorVest, put on EPS, put on GRT, put on sales and net profit margin. How do your stocks stack up? And that wraps it up for this week. Hope you got a lot out of it. Until next week, bye for now.